Dear friends of Carl Zeiss Meditech, it is my great pleasure to welcome you and guide you through our half-year 2021-22 report. We delivered revenue of 855 million euro, up around 11% versus the past year. Order intake even grew by more than 30% to 106 billion euro. This result shows that there is a very strong demand for our products in these markets. Both strategic business units did well in the first half year. Ophthalmic devices grew by around 10%, with a strong contribution once again from our recurring business with surgical consumables. Microsurgery grew by around 15%. Main regional driver was once again Asia Pacific. The Asia Pacific region accounted for almost half of our sales in this period.
EBIT grew to 103 million euro, up 16% year over year. The EBIT margin was 20.7%, down only very slightly from last year's 21.2%. The last year's numbers were a bit inflated by a one-time gain of 2.4 million euro from a property transaction. Adjusting for this effect, we came very close to a stable margin. This is truly an excellent result, despite significantly higher investments in sales and marketing, research and development, and also procurement. Earnings per share were up by 28% to 1.44 euro.
We are very happy with these strong financial results and grateful to our customers and our very strong team who made it happen. Unfortunately, the macro environment in which we operate is increasingly complex. Particularly, the supply chain situation is affected heavily by the war in Ukraine on the one hand. On the other hand, there is a resurgence of the COVID-19 pandemic in Asia Pacific. There are several regional lockdowns in China impacting our business.
We are able to confirm our previous guidance. We expect revenues to grow at least as fast as underlying markets, which under normal conditions would mean roughly in a mid-single-digit percentage range. The tension in global supply chains has clearly risen further from the factors Markus has mentioned. We are already seeing new supply chain bottlenecks materialize. The outlook for the second half therefore remains highly uncertain. The EBIT margin should reach a level of 19 to 21% for the fiscal year 21-22. This remains achievable as long as there is no critical disruption to our supplies. In the midterm, our EBIT margin should be sustainably above 20%, driven by the rising share of recurring revenue. On the other hand, we will continue to make significant strategic reinvestments into sales and marketing, as well as research and development.
Thank you for your interest. Please reach out to our investor relations team for questions and meeting requests. Thank you.
Since you watched this company video until the end, I'm guessing you liked the video. That's probably because we work very hard to create the most engaging and value-added content possible for you. If you're a stock-listed company or corporation and want to find out how we at C11A can make a company video with and about you, please email us at community@c11a.com.